Welcome back to the Dividend Diplomats YouTube channel. You're rolling with Bert, and you know I'm Lanny, the Dividend Diplomats, and we're here to talk to you about two stocks that I'm watching heading into the halfway mark of February.
But before we get through Lanny's watch list and we check out all of the dividend stocks, smash that subscribe button. Give this video a nice thumbs up, everybody. Come on, help our channel grow, get us to 20,000 subscribers so we can do another WWE video. Brought to you by the Dividend Diplomats. All right, Lanny, my watch list just came out here for the rest of February. You put two stocks together. You have a new watch list. Fantastic stuff. Talk to us a little bit about it.
Guys, just two dividend stocks that I currently own in my portfolio. I'm pretty sure you own both of them as well.
I do, yeah.
And they've had some significant price compression so far this year to date.
Yeah, they both have actually. That's pretty true. I mean, one's in line with the market and the decrease. One is just way worse than underperforming the market.
And you know, these two stocks are dividend growth stocks, great dividend growth rates. You know, the one really makes it special, very extra special when it comes to dividends as well.
And one of them helps that dividend tree in your backyard grow with some of its products.
So guys, here we have it. This is a dividend stock watch list right now. The stock prices that we'll be using is as of February 11th. The Dividend Diplomats is here cranking out the videos for you, giving you other dividend stock investing ideas in still this high stock market, even though it's trading only just above 4,400.
Yeah, and the stock market's been interesting to start 2022, and it's really presented some interesting buying opportunities. You never really know where the stock market's going to go or what direction, when it's going to increase 1%, when some news is going to come out, potential overseas conflicts, potential inflation numbers, when that might just spin it back down to the market suddenly dropping. Because that's exactly what happened and gave Lanny the chance to rebuild his watch list and put these two companies for the rest of the month.
Exactly. So guys, we're going to dive in using the Dividend Diplomats stock screener metric, focused on three metrics. One, the price to earnings less than the S&P 500, preferably against the competition.
Yeah, no, I got went a little early on there. Yeah,
you take it easy.
Yeah, my bad, everybody. My bad. Metric two, that payout ratio here, where we look for usually a payout ratio less than 60%, but that perfect payout ratio is between 40 and 60%. Three,
the dividend growth rate. We look at that passive income stream to grow that you're getting from the dividend stock that you own.
Yeah, that bonus metric here, the dividend yield. It's the little cherry on top after a company passes our stock screener. Doesn't drive our decision, but we definitely consider the dividend yield. But we always want to make sure that the fundamental three metrics of our stock screener are looked at first before we start considering the yield. You don't eat dessert before you eat dinner.
Exactly. So guys, let's get into the first dividend stock. Iconic, legendary brand, bringing people together. Bert featured it quite a few weeks ago on the YouTube channel, but I wanted to bring it back now that the stock price is below $95 per share. It is Starbucks, ticker symbol SBUX. So get your coffee for this one. Starbucks stock is below $95 at $93.73 right now.
It is still incredible that Starbucks has fallen this much. I didn't think we'd ever see Starbucks below 100 again, because that stock price has just continued to climb over the last 5 years. But it's 2022, so here we are. Stock price is down nearly 20% year to date, down 19.67% at the time we're recording this video, to be exact. Yeah, I mean, you've been watching it. A few weeks ago you said, hey, I'd buy Starbucks if it kept falling. It was below 95, so it's interesting that it is sustaining below 95 and it is back here on your watch list again.
So here we are, guys. That first dividend stock metric, the price to earnings ratio. Analysts are expecting earnings to be for Starbucks $3.91. You know, taking that with the share price of $93.73, the P ratio is going to look high. It's at 23.97, but historically is usually in the upper 20s, if not lower 30s.
And that's why it's important to look at the historical P/E ratio for company too. We always start by looking at the market. That's one thing. It's in line and just barely below the market. But from Starbucks standards, yeah, to your point, it is trading at a discount compared to where the company usually trades.
So getting into that second dividend stock metric, the dividend payout ratio. Again, the perfect payout ratio is between 40 and 60%. They pay a quarterly dividend of 49 cents per share or $1.96 per year. The perfect payout ratio, Bert, 50% for Starbucks.
Boom, right there. I mean, I don't know what more to say. You can't really get more perfect than that. Right on the money at 50%.
It's true.
The third metric, the dividend growth rate, 5-year dividend growth rate, 16.05%, and they've increased that dividend for 11 plus years, nearly halfway to becoming a dividend aristocrat, a company that's increased its dividend for 25 consecutive years.
11 years.
Yeah, it's great. I mean,
16% is the dividend growth rate on average.
Yeah, that's about right. I mean, it's historically been a lower yielding stock, so seeing a very strong dividend growth rate there for Starbucks is clutch.
I wonder what kind of increase they're going to have this year.
Well, I think this will be a very telling year for Starbucks too. I mean, how much of the decreases in macroeconomic, or what is management thinking from the long-term perspective? Because if they announce another 16% dividend increase or something very strong like that, I'll be buying much more of Starbucks, because to me that indicates that management's not really concerned about this short-term dip.
Their last increase was, about 9%. They increased it by 4 cents from 45 to 49. We'll see if they start going above that 4 cents per share increase.
But this bonus metric here, the dividend yield, this is huge for Starbucks. Here, their dividend yield crossed a pretty important metric here, and a threshold there for Starbucks investors. Landy, where is their dividend yield currently today?
It finally has crossed the 2%. I know that seems low, but again, when you have the higher dividend growth stocks, usually that means a lower dividend yield usually, so 2.09% on the yield front.
Yeah, you're getting a nice premium to the S&P 500 finally for those Starbucks investors. So that's clutch for a low yield, high dividend growth stock. This is an interesting opportunity.
It's clutch. So guys, to summarize the metrics, you have a PE ratio for Starbucks at just under 24, a perfect dividend payout ratio at 50%, dividend growth rate of over 11 plus years at an average rate of 16%, with an above average current dividend yield of 2.09%.
All right, so for this second one, let's go to the garage, get our shovels, get our rakes, get
the fertilizer, get the mulch.
Yeah, let's just go out back to talk about this second one here.
Let's go and talk about Scott's Miracle-Gro, ticker symbol SMG. Back on my little list here of stocks I'm looking to buy possibly.
Headquartered in
good old Ohio, baby.
You know how much I love Ohio-based stocks, so I'm pumped up that they made the cut here to get onto your watch list, Lanny.
OHIO.
Scott's fantastic opportunity. They have come down significantly as well. Their stock chart's doing a nice jumped up, and here we are back down. It's incredible. I mean, year to date, they're down 7.88%, in line with the market. 52-week, they're up 12.3%, but that is very deceiving, because what was their 52-week high, Lanny?
The 52-week high was actually $254, so they're down $114 from that 52-week high.
So let me redraw this chart. It was here. Woohoo! And now it's back down. So yeah, Lanny, let's get the metrics here for Scott's Miracle-Gro and see why they popped up on your watch list. I'm excited to see the results for this one.
Sure, let's dive in. So Scott's Miracle-Gro, again, as of the price on February 11th, $140.37. Analysts are expecting $8.40 in earnings. That equates to a PE ratio of only 16.71.
Wow, yeah, it's a huge discount compared to the market there. Second metric, payout ratio. Their dividend is $2.64. Their payout ratio is 31.43%. Fantastic payout ratio there. So let's put a pin here in the payout ratio in assessing the 31% for a second here, because we're going to move into Scott's third metric, the dividend growth history, where there's going to be something interesting we want to highlight with them that's a little different than all the other stocks.
Yeah, so when we look at the dividend growth rate, that third metric for Scott's Miracle-Gro, again, they've been increasing it for over 11 years. But they do a little something special every handful of years. Bert, what did they do in 2020?
And they announced a massive, let me wait one more time, massive special dividend, not one share, dollar, not $2, but $5 per share special dividend in 2020. Put that in perspective, I just said their annual dividend is $2.64. So that special dividend was nearly double their regular annual dividend.
Then back in 2014, they also had a special dividend of $2 per share. So when we calculate the dividend growth rate, we back this out. We want to look at just the normal dividend increases and what that rate is. So not including the special dividends, the dividend growth rate is only 5.72%, but they do this special dividend once every handful of years. So the growth rate is much better on an annualized basis.
Yeah, but again, since it's a special dividend, you can't guarantee that they're going to do it. We can't factor it into the actual growth rate, but they have that history of doing the special dividends, which is always excellent to see here for Scott's.
It's always excellent. So guys, dividend growth rate 11 years, 5.72%. 2 special dividends in the last 7.5 years, $2.14, $5 in 2020. Now we're going to look at the dividend yield. They're not quite the 2% that Starbucks brings, but they are knocking on that 2% door at 1.88% currently from Scott's Miracle-Gro, which is still above the S&P 500.
Yeah, and again, everyone, that's just the regular recurring dividend there. If we're going to have some fun with it, we'll take the $5, divide that by the $1.40 that it's at, just for the heck of it. That's 3.50%, or 5.6%.
Wow. Wow, so you just add that to the top if you want to. You could spread that out and say, hey, let's just maybe add in an extra buck. Either which way, your yield currently is $1 or 1.88% on the current yield or on the current dividend normal payout. But again, when you incorporate some sort of special dividend over an annual basis, it's actually much higher.
Yeah, that's why it's fun to look at Scott's, and it's so exciting that they're on that watch list. So here, let's summarize Scott's. PE ratio, 16.71. Payout ratio, 31%. 5-year dividend growth rate without the special dividends is 5.72%. They've increased that dividend for 11 consecutive years, and their yield, without factoring in any special dividends, is 1.88%.
And to recap Starbucks again real quick, price to earnings of 24, payout ratio of 50%, dividend growth rate of 16% for 11 years, and a yield of over 2%. You'll see here on the chart, the comparison between the two right now.
It's interesting how some of their metrics are actually pretty much in line. Their yield's the same. They've increased for the same number of years. Different sectors, obviously. Scott's is trading at a much lower PE ratio, much lower current payout ratio, and I guess you have much lower dividend growth. So, hey, interesting. But
the payout ratio technically could be higher on Scott's when you incorporate possibly that special dividend when you spread it out.
Yeah, they always have to throw it out. It's interesting. So, all right, 2 stocks. 2 great companies, 2 stocks that both of us own. What is your thought process going on here, Lanny? Are you buying 1, 2, or are you waiting for certain prices for each one of them?
I did buy Starbucks, as you'll catch in our upcoming video here, at $95 a share. I'm looking at Starbucks still, maybe at the $92.50, $90 range. I'll buy probably at least another share. Scott's Miracle-Gro, I'm really honing in on them. $135 per share is really where my eyes are set on.
Yeah, I was looking for Scott's to get it to a 2% dividend yield. That puts the price at around $132. So $8 a share, it could easily happen, right?
Yeah, it's not that much from an actual percent standpoint, but again, we'll have to see what happens in the stock market to really make these screaming stock buys right now for me, but they're high on my dividend growth stock watch list.
Yeah, again, I can see why both of them are sitting on there. I could have probably added them into my last video too here, because there are a ton of great stocks right now. I featured 2, you just featured 2 other ones. I could have had 4, I could have had 5, 6, 7, 8, maybe 9, 10, but in all seriousness, excellent stocks, Lanny. Great findings.
Guys, what do you think about these 2 stocks? Leave them in the comments below. Again, if you haven't already, definitely subscribe and smash that nice thumbs up on this video. We appreciate all the support and stopping by the Dividend Diplomats YouTube channel. Bert, any other parting words for the viewers?
Just keep buying these income-producing assets. I think that's all what it is.
Keep buying assets.
Yeah, whether it's these 2, other 2, other 10, just let us know what you're doing, what you're thinking, and how much your income is growing from those purchases.
That was Bert, the Hurt, and Lanny from the Dividend Diplomats.
Over and out.